What's going on, everybody? This is the blockchain backer, bringing you the latest cryptocurrency news and analysis. Today, we're going to tie a lot of stuff together with the cryptocurrency market when it comes to Bitcoin, the altcoin market, XRP, and some of the things that we've talked about this week, like trying to identify if the bottom of the Bitcoin crash, pullback, bear market, whatever you want to call it, is over. We've spent time studying the altcoin market this week to determine, when does the altcoin market move? When does XRP move based on what the rest of the market is moving? And it's been kind of, if you've noticed the trend in this week, kind of building on top of itself, that in order for XRP to rise, it's if the altcoin market can rise. And if the altcoin market can rise, it's due to Bitcoin being able to rise. And so if we want to see Bitcoin rise, well, then what do we need to be looking for to say, how has the past behaved? What are examples we can look back to see how the bottom has come in or how long it has taken to come in? We went through all the different examples of the most popular theories out there on Twitter and YouTube of when the bear market will end or when the crash will end. And really, all of them had their own nuances with them. One of them we did point to over here, though, is that, hey, if we looked back to when the top came in for Coinbase's IPO back in here and how much time has elapsed since that moment, that suddenly the past starts to make a little bit more sense in here from a timing perspective of when peak euphoria in this market happened. And when we look back to this fractal back in here, we can see our pit stop of where we've stopped at, which also coincides with the previous top of the 2017 bull market and a 786 Fibonacci retracement from a run-up that began back in March. But if we're cheering for altcoins like XRP to be able to get a breakout, and if that's dependent on the altcoin market in general getting a breakout, and if the altcoin market is dependent on Bitcoin getting a breakout, well then who is Bitcoin dependent on to get a breakout? And that is where this video is going, is tying more of the macro picture into what's going on in markets to bring it all back into the cryptocurrency market. And since mid-June, we've seen the NASDAQ rise 20%. We've seen the Dow Jones rise 10%. And the S&P 500 rise 14%. So could the bottom be in for the stock market? And with the strong reversal we've seen happen over here on Coinbase, getting up as high as being 118% up over the last week, could it mean that we've seen a Wyckoff accumulation and a reversal happening on here on Coinbase? And is that going to transpire into the crypto market? So this week, we've looked at single digital assets and tied it into the rest of the altcoin market, which tied it into the Bitcoin market. And in this video, we're going to take a look here at the broader market and at the stock market, equity market, commodities, inflation, and see if we can make any sense of what's happening here in the stock market. Some of these videos have been quite long this week. We'll see how this one turns out. But today, we're going to be deep diving into the broader markets to see if we can bring that back into the crypto market. So before we get started, the sponsor of this video is Linqto, private investing made simple, where you can get access to the world's leading private companies before they go public. Anyone can sign up at Linqto to get access to their research and informative newsletters, which provides data and insights of what's happening in markets. And accredited investors can invest in private equity with popular companies listed on their website, including some of the top sellers such as Ripple, Linqto, and BitPay, prior to them having their IPO. You can check out Linqto by visiting the link in the description of this video to get started on your own private investing journey with some of the world's leading private companies prior to them going IPO, right here on Linqto. Now, throughout the history of my YouTube channel, I have always presented the idea that the crypto market is really tied to the stock market. And here back in December of last year, I posted this over here. Many of you guys have seen this multiple times already, but a friendly reminder to show Bitcoin's performance with the Dow Jones. In which, if we look back to when the creation of Bitcoin happened, which was in the depths of the great financial crisis, and monitor every time that the Dow Jones moved up, this was when Bitcoin was having a bull market. Anytime it went through a period of consolidation, Bitcoin went into a bear market. If it broke up to a new level, Bitcoin was in a bull market, consolidation, bear market, big breakout, bull market, consolidation, bear, breakout, bull. It's clear as day. And as we all know, if we looked at this chart right now, what has happened is that this Dow Jones got to about right here and rolled over, and now we're back right around here. And what has happened to the cryptocurrency market during that time? we all know we've been pulling back with it too. So if anybody's cheering for any individual crypto asset in the market, it's like, okay, well, it's really tied to the rest of the altcoin market. And the rest of the altcoin market is really tied to what Bitcoin is doing. And if Bitcoin is really tied to the stock market, well, we can find confluences over here on the Bitcoin price chart to say, hey, that looks good enough. That looks like that could be the bottom. That's back testing here. That's Fibonacci retracements in here. But if we know this guy is a key element in here as well, well, could that have been good enough for the Dow too? Can the Dow Jones move on and set new all-time highs? Now, we're not going to actually spend a tremendous amount of time on the Dow Jones. I've pretty much beaten this down pretty good here on this YouTube channel. Most of you guys have already seen it. Essentially, the Dow Jones has gotten incredibly close to being at a 4.236 extension. The pullback that we've currently had right now is still holding on top of the February of 2020 highs and on top of the 200-week moving average. Also, on the weekly time frame, we've seen bullish divergences emerge in here. You can see some green showing up on the MACD for the first time since way back in here, since June of 2021. So a whole year of this red. We're getting a cross happen here on the MACD on the weekly time frame with some green emerging. And we also had bullish divergences emerging on the RSI. And hey, look, RSI started to pop out. So these are positive things to look for here to see that 200-week moving average, the RSI, previous highs holding, good stuff. But we know that a lot of the issues in the market, or at least the narratives of the issues in the market, of course, have to stem from inflation, recession, employment, housing, all these things. But we also know it's been kind of like a capitulative moment in here. If you look at polls out there on Twitter, you'll see that like 72% of people believe that the stock market is going to continue going down lower. Pretty much the general consensus among retail investors has been that we're going to go lower. It was a very capitulative style moment here in the stock market and with crypto. Crypto, not just price action, but all of the events that happen in crypto, USDT, DPEG, UST, Luna, Three Arrows Capital, Celsius, all that. The list goes on that. But what has happened since extreme bearishness hit this market is that we had our bullish divergence emerge right in here, and now prices have all rolled up as everybody was expecting prices to go down lower. Something else very interesting is when we look at Coinbase, right? So here's Coinbase at $370. They've been just in this downtrend ever since last year. Huge capitulation moment here in May. That's when Luna, UST, all that stuff was happening. And then the formation of what we've created down here ever since May looks like that of a Wyckoff accumulation. And I even posted this over here on Twitter this week, in which Kathy Wood of ARK just sold nearly 1.41 million shares of Coinbase at all-time lows of $53. The average cost that ARK purchased coin at was $254. And I commented and said, I think she actually sold the spring in a Wyckoff accumulation, pointing to what Wyckoff accumulations look like in here specifically for Bitcoin back in 2015 and 16. And what Coinbase was looking like we were back at Wyckoff accumulation. We had already gone through spring. We were getting ready for our sign of strength moment for an actual breakout. But the point of this is that here we are for Coinbase, and we were actually seeing Wyckoff accumulation show up. The element that was next, that was missing, was for our sign of strength breakout to come. And I posted this over here on August 3rd, so just 2 days ago. Well, what happened yesterday? Coinbase and BlackRock announce a partnership, and the sign of strength emerges, and the price of Coinbase fires up 38% at one point yesterday. So over here in the equity market, when it pertains to crypto, we're seeing what appears to be Wyckoff accumulation of a bottoming pattern emerge here on Coinbase, and the elements happening that are supposed to. We had spring. You had a big name capitulate on the spring. And then for the sign of strength breakout, you have BlackRock and Coinbase come out and announce their partnership. I don't know. Those are pretty interesting things to happen at the specific time that they happened at. Retail capitulation followed by euphoric news to break out. So is the Coinbase chart telling us that BlackRock and the market expect trading volumes to return back to cryptocurrency? Maybe. But this bounce in the stock market doesn't have all the great things that you would want to see happening in here. First of all, for the Dow Jones, it hasn't taken out the high set back there in May. The NASDAQ absolutely has, still coming in here, holding that 200-week moving average, and definitely has taken out the high set back there in May. But there's certain things that we talk about on this YouTube channel that I've got my eyes on for sure. And of course, that's the 702 Fibonacci retracement. And we know that Apple is in a massive bubble, massive. And if we look at how this fall has taken place here for Apple and where it is retraced back to at this exact moment, Where has it gone back to? It has gone back to a 702 Fibonacci retracement at this moment. When the Bitcoin bubble popped back in 2017, where did we retrace back to on Bitcoin before it rolled over and then went down into a bigger bear market? Right back to that 702. In the 1980s, before the 702 was ever even shared by the blockchain backer, where did gold go to after the gold bubble popped? Right back to the 702. Then it turned over and rolled over. But if we look at the broader index of the NASDAQ, has it gone back to a 702 retracement? No, not even close. Nor has it gone back to 50% or a 618. And neither has the Dow Jones, not making it back to 50%, 618, or 702. But Apple is the largest by market cap in the Dow Jones Industrial Average, followed by Microsoft. And we can see that Microsoft still has not gone back into a full retracement at this point, still just making it back to the 382, not quite to 50%, 61.8%, or the 702 Fibonacci retracement. But definitely on my radar to see that Apple already has. Now, of course, when we look at bubbles of this magnitude, it does scare the daylights out of you because it's very easy to imagine the whole thing just popping and coming and crashing on down. And in the long term, that is the story of what will happen for Microsoft. But the question is it happening just yet? One of the things that we know is that typically there's going to be an initial profit take that happens at tops. Or if we're going to just have a big pop from the top, there's going to be a retrace. You can even look back to Microsoft's previous pop that it ended up having in here. You could see that it popped, retraced back, and then went down a total of 67% in here. Looks like a little bit lower, all the way down to 75. But as we know, even in things like Ethereum, having the initial first profit take before going on, setting a new high, and then crumbling over on itself, that looking at these structurally a little bit up close, you could see we have some similarities happening in here where things just kind of got parabolic. Things got parabolic, and here we are pulling back down into these price levels back down in here. And that it could be its first profit take before it rolls up, tries to give one more shot, and then lights out, which would have confluence with what's going on over here with the Dow Jones Industrial Average coming up just a little bit short of its 4.236 extension here for the last 14 years. And the same thing for the NASDAQ for the last 22 years, coming up a little bit short of that 4.236 extension. A first initial profit take happening right here between the 3.618 and the 4.236, which is exactly what Ethereum did back then. Same thing, parabolic rise, gets above that 3.618, not quite to that 4.236. After the parabolic rise, big pullback. What's it do? It goes on and pushes one last time to hit that 4.236 extension and then lights out. That would be very plausible here on the NASDAQ for an initial profit taking to be happening in here. And notice where we've pulled back to in here after kind of having a 1, 2, 3, 4, 5, and where Ethereum pulled back into after a 1, 2, 3, 4, 5. So Apple on the radar, watching that bad boy because that's the number one market cap in the Dow Jones back at the 702. But what could it all mean? It could all be just like Bitcoin stuff from back in 2017, that there's rotation that has to happen in the market, but also that maybe that sentiment has gotten more back to neutral. We had extreme bearishness in retail investors down in here. Now that prices have moved their way back up, it seems like a lot of it has kind of settled. There's still a lot of screaming of suckers rally, right? There's people who got left behind and they're screaming, no, 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 it's not going to be anything. I love seeing that. I've been in this market long enough to know when there's if prices are rising and there's a ton of people screaming the prices are going to come down, that's a good thing. You want to see that for sure, because that means there's so much money sitting on the sideline. There's so many people who have capitulated at the bottom that they're not willing to get back in, but that there does become a price level where they have to all get back in. And so we can recognize the big extreme change in behavior when nobody's screaming bear anymore. Everybody's screaming bull. That's the top. And so that could happen at a retracement. We'll have to see. But there's still a ton of people screaming suckers rally. And I know a lot of people try to do fundamental analysis to be able to predict where the stock market is. I really try my hardest to just kind of stick to the charts and say, these are what the thing says, right? So we know that we needed to hold this level here for the Dow Jones. It has held it so far. And we do have green emerging down in here with positive strength emerging. But what has been the narrative for things that people are scared of? They've been scared of inflation, and then the inflation shifts over to recession. So it's kind of like no matter what, or positive job reports is also bad too. So it's like good news is bad news is good news, inflation is bad, Recession is bad, but that's also bad news. So isn't that good news, right? So it's like trying to make sense of all of that fundamental stuff to try to like fit into a narrative of why prices have to go up and down in the stock market. If bad is good and good is bad, but bad is also bad, but good is not good. It's kind of crazy. But one thing we have noticed here in the last couple of days has been that oil has broken down. So oil has taken out its 200-day moving average. It's also taken out the invasion level from right here earlier this year in February. If you don't know this, I've talked about this on my channel quite a few times in here. There's been multiple moments here with Ukraine and with Russia. And then this was 2014 when Ukraine and Russia were having their conflict and the price of oil actually broke down in here. And then Russia invaded Ukraine right when it got back to that level and forced a breakout to happen in here. Now enough months have passed. We're 6 months now past the invasion. Now we've broken back down below invasion pricing here for oil and the 200-day moving average in here. If we close the week out at this point right now, we would actually be closing below the 50-week moving average. So it'll be interesting to see how that plays out, but that will likely transpire into even further declines in gasoline prices, which we can see over here on gasoline futures as well, that they too have taken out the 200-day moving average. And ever since the top right here back in June, we're down about $1.50, $1.53 currently at this moment from the peak on gasoline. So probably notice that again at your gas stations continuing. There is a delay. Typically the gas stations have bought their gasoline here. They're having to work through it. Then they buy their next tank of gasoline. Then you get that pricing. Then they buy their next tank. And so you're usually a little delayed at what you see at your pump. But right now, what we're seeing still continued farther fall in gasoline prices. So we know that gasoline is a major contributor to inflation everywhere, right? Farmers have to use it for all of their tractors and processing. Trucks have to use it to transport goods, shipping containers, boats, freight. They all use gasoline, right? And manufacturers who manufacture products use gasoline. So gasoline prices are a contributor to inflation for everything, whether it's transporting goods and services, farming for your food, or commuting to work, commuting to places. So it's positive for the inflation front to see gasoline prices coming down in here. But then the bears, of course, will argue that this is a further validator of reduced demand, recessionary pressures, a weak consumer, less demand, right? So it's still the narrative will somehow get spun. So figuring out how to do that, pretty difficult to say, well, what does it mean, right? That's what everybody wants to know. But the reality is, from an inflationary standpoint, inflation seems to be cooling off. We're seeing it happening in the housing market. We're seeing it happen over here in gasoline. We're seeing it happen in most commodities. That inflation is cooling, which Danielle DiMartino Booth posts over here. Food prices for now appear to be headed down, which is great news. So at least the rate of change is heading down. In which I had mentioned that I thought our last CPI print that we got at 9.1% would be the Pico top of the inflation CPI prints. Yesterday, Elon Musk had his shareholder meeting, and he even said in here, the trend is down, which suggests we are past peak inflation. I think inflation is going to drop rapidly. So then that begs the question, well, if inflation is going down, is that good for the stock market? Does the consumer have more purchasing power? Will they have more free disposable income to be able to invest? If inflation is coming down, does that mean that the Federal Reserve is going to chill out on their interest rate hikes? Or if inflation is coming down, does that also signal some type of recessionary pressures that could lead to a depression? Does that mean that people are actually really weak and they're not spending their money? Or with the fall in gas prices, is that also signaling that the Russia and Ukraine conflict could be coming to an end pretty soon? But at the same time, are there now conflicts that are starting over there with China, as they say they're going to halt talks with the U.S. over military and climate issues now that Nancy Pelosi has visited Taiwan, and now that they've issued sanctions against Nancy Pelosi and her family members? Do we now have to worry about that being an impact on the stock market in addition to the Federal Reserve, housing market, inflation, oil, recession, employment, Russia, Ukraine? Which one is it? Which one's the positive one? Is Bitcoin actually an inflation hedge at all? Or is it not an inflation hedge? And that if inflation is going down, that's bad for Bitcoin. When I try to make sense of all of those different elements all at the exact same time, I feel like I'm standing in front of a chalkboard. I've got lines drawn between everything, and that it's some type of 5D chess between all of these different things on what is bad, what is good that is bad, and what is bad that is actually good. And then what surprises can show up that can change everything entirely. And what is the Fed going to do with each piece of data that they get? So I will tell you that I am 100% incapable of being able to draw all those lines together between each element, determining what is bad, what is good, and what is the 5D chess that is being played between all of it, and what the final outcome is based on any of those things. We know that everybody was screaming that everything was horrible down in here, and that the Dow Jones has gone up 10%, the S&P has gone up 14%, and the Nasdaq has gone up 20% since all of the screaming taking place back there in June and in May. Here we are in August, we're up 20% in the Nasdaq. The price levels for a parabolic bubble to continue reaching onto a 4.236 on the Dow Jones have continued to hold. But what none of this tells us on here is what the structure can look like heading back up, or if it's just going to go into a retracement, that the Dow Jones could just head back into an actual retracement in here and roll over, or if it goes off and hits the 4.236. It also doesn't tell us if we're going to continue breaking through here and continue and continue and then we're done, or do we continue and continue and continue and then we're done, or do we have longer consolidation in here and then we work our way up, something like that. You're not going to get that answer looking at the chart. You're not going to get that answer by analyzing the Fed's actions based on employment and inflation, Russia, China. None of that's going to tell any of that in regards to timing. But if we're trying to figure out, right, if Bitcoin can only go up due to the stock market going up, well, we've gotten what we've wanted so far. We spent weeks and months really saying, hey, this price level down here has to hold. It did hold. We've moved our way up. Doesn't mean we're not going to find some resistance here that we have to fight through for a couple of weeks before trying to work a little bit higher. But the optimistic thing is we've seen things like Apple already get back up in here. And we've seen the NASDAQ catch a pretty good bounce, taking out the highs that were set there back in May. And we're right back here now at April pricing. So we're at the prices that we were at 4 months ago with positive developments occurring here on the RSI. You can look at the weekly time frame. We haven't gotten this oversold here in the NASDAQ since back in the great financial crisis. So we dipped down into oversold even over here on the NASDAQ. And now we're starting to print some green down here in the MACD with a cross coming in. And the first time we've even seen green here on the NASDAQ since back in December of last year. So support looks to be coming in here in the stock market. Again, we can all try to analyze the inflation, the Fed, China, Russia, Ukraine, employment. What is the Fed's next move going to be? Is the recession going to kick in? How about consumer spending? All that stuff, right? The only thing I can do on my channel is at least point to these things. I can't analyze all those things without putting a tinfoil hat on to say which way the 5D chess is going to play. But from the stock market perspective, where this is all circling back to, and the original point of all of it, is that we see crosses coming in here on the stock market. We see the bounces coming in where we wanted to see them coming in here. And this looks awfully familiar here on the NASDAQ to what an initial profit taking looks like that eventually goes on and does set a new high. But it still could be a while before it eventually works its way back up, because crypto, it moves a whole lot faster, right? I mean, looking at Ethereum, this is May. We're all the way back up here by August. That's only 3 months later. For the NASDAQ, you're looking at November up in here, and here we are in June. So this whole process right in here took 7 months, whereas this whole process right in here took about 2 to 2.5 months. And if there's more working out in this zone, that would make some logical sense based on how these things have played out before. And even if we look over here at Coinbase, right, which we're talking about having a Wyckoff accumulation with the sign of strength breaking out in here at this point, well, you know, you could work in here and you could work sideways and then still just continue here waddling sideways for quite some time. And even that gets you through August, September, October, before even another step up can start to emerge in itself. But if Bitcoin, if crypto is requiring that the stock market continues to march upwards, are there the signs in here on the chart for the stock market that the bottom is actually in already? And we've seen that initial profit takes can pull back down into these price levels, which also happens to be a Fibonacci retracement level. It's pulled back to the 200-week moving average, and we can see the bounces coming in here on the RSI and over here on the MACD, things that we haven't seen emerge ever since the top from back here in November and in December are starting to finally emerge down here at these price levels for the first time. Are those positive signs to say that the bottom is in? Nothing is guaranteed. We can't predict the future with perfect accuracy. But those are positive signs to say the bottom is already in. And it was in back here, back in early to mid-June, which is where Bitcoin bottomed out in here. It's where Ethereum Classic bottomed out in here, popping up 170%. Where Binance Coin bottomed out in here. Now finally one of the few reaching up above here in the top 4, where Ethereum bottomed, and really the entire crypto market, which of course was the precise day Bitcoin hit its previous all-time high and its 786 Fibonacci retracement and completed what appeared to be a final ending phase of a capitulation in a market for Bitcoin, structurally and from a time perspective. So Coinbase giving us good signs, and the stock market too, that it seems like the bottom is already in. For anyone arguing that it has to go lower than where it's already gone, just recognize that you would have to be saying that we would break the 200-week moving average by going any lower, and we haven't done that in 12 years. So it would have to be the first time that it would has happened in 12 years to say that it's going to break. Is it possible? Of course it's possible. But for 12 years, it's held, and till now, it still has. So this whole week, I've kind of like built this long case, starting with like, altcoin market, then XRP, then Bitcoin, now equity markets, and like, how does all of that tie in for how I formulate my opinion? And who knows if my opinion will be right, but I can show you why I've come to all the conclusions that I have and why my opinion is the way it is, right? I own altcoins because altcoins have a tendency to perform well when Bitcoin does well. And I've shown that I think that the bottom of Bitcoin has come in due to following previous bear market completions, hitting the previous all-time high, and a 786 retracement. I believe those factors give me enough justification to say there's a reasonable chance the bottom of Bitcoin is already in. And at the same time, since I have the fundamental belief that Bitcoin follows the stock market, do I believe that the bottom of the stock market is already in at the same time? And here are all the reasons why I believe it, right? We've held on top of the February 2020 highs. We've held on top of the 200-week moving average. And typically with tops, if we haven't reached the 4.236 extension, there's typically this initial profit take that then goes on to hit the 4.236 extension. So my fundamental beliefs of the stock market are that we're holding and that we're going to reach out to the 4.236 extension, as we saw for Bitcoin and we saw for Ethereum. If these things were to happen, that would positively impact Bitcoin, right? Because that's how history has behaved. And so if the stock market looks like it's bottomed, does Bitcoin look like it's bottomed? It does, like I just said, right? It looks like what the previous completed crashes have looked like, and happening at the 786 Fibonacci retracement, and happening at the 2017 all-time high. Those are Confluence things happening together within themselves. Do I think Bitcoin's going to go on and set a new all-time high? That is a very difficult argument to make due to the fact that Bitcoin has already hit a 4.236 extension. But what is very common is that markets tend to work their way back up in retracements. And if Bitcoin were to operate like this and work back in for some form of a retracement like so, well, how big would that retracement be for Bitcoin? It would be back to about the 702 Fibonacci retracement. And have we ever seen that happen before where it was positive for the altcoin market? Yes, we did back in 2018. So I don't sit here saying, I think altcoin market's going to do well just because, YOLO, moon mission, we're all going to be filthy rich. It's this big, long thesis that I have in here for Bitcoin and for the stock market and for the altcoin market, that Bitcoin has bottomed, the stock market has bottomed. Bitcoin has already done a 4.236 extension in here. It seems unlikely to me that Bitcoin's going to go on to a new all-time high, and that the chase for yield will probably happen in the altcoin market because people are finally realizing percentages are not that great, right? Even in here, it was crazy to me that, hey, you're at $65,000. You're trying to get to 100K. You're trying to make 30%. Trying to make 50%, right? After the price has already risen 50. I've seen this market before. A lot of you have seen it. Now they chase Doge, they chase SHIB, they chase Elon coin, right? They're chasing yield. So due to the levels Bitcoin has fallen back to, due to the price levels that the stock market has fallen back to, and the strength emerging in the stock market, my fundamental belief, my underlying belief is that, hey, we have a chance to rise up and hit the 4.236 extension. That's been positive for crypto throughout history. Coinbase is giving us early signs of something like that emerging. And my underlying thesis on all markets right now is bullish. I don't know if the NASDAQ is going to pull back down before it can work up. I do not know that. But the thing is about all of these things too, when we're showing Bitcoin, when we're showing the Dow Jones, when we're showing the NASDAQ, it also shows the invalidation point of where all of it breaks apart. You have so many people looking for one more break. But in the event of one more break, all of it gets invalidated. You lose initial profit, take structures of where things pull back before they go on for their final 4.236 extension hit. You lose previous tops that in parabolic rises show that these must hold in order for a parabola to continue. Breaking that takes out the 200-week moving average and takes out the parabola. And breaking lower takes out the previous all-time high, takes out the 786 Fibonacci retracement in here, and takes out our fractal holding level, and takes out the altcoin market's 200-week moving average and all-time high. So going any deeper than where we're at right now invalidates all of it, and that the level we're at right now for the NASDAQ, for the Dow Jones, and for Bitcoin must hold, or you lose everything. But what does it also say? It says that you have an absurd amount of confluence showing that a bottom is in all over Bitcoin, while you also have the altcoin market holding the 200-week moving average on top of its previous all-time high, while you also have Coinbase breaking out in Wyckoff accumulation, the Dow Jones holding the February 2020 high, while also holding the 200-week moving average with positive strength indicators emerging, and also the NASDAQ doing the exact same thing, which is what initial profit-taking structures look like and where it pulled back to, that have shown that these things eventually work their way up to 4.236 extensions. It's a massive amount of confluence between the altcoin market, Bitcoin, and the stock market all at the same time. Invalidations of all of it happen if you go any lower than we've already gone. But at the same time, what you're showing is a massive amount of confluence of support, all showing up between multiple markets at the exact same time. And so underlying, that's my grand thesis of it all. I'm bullish because of all these things happening at the exact same time where they're all happening at. If the NASDAQ and the Dow Jones had already hit their 4.236 extensions, I would be scared tremendously. But what we're showing is similar structures of what initial profit takes look like before we go on to hit the 4.236 extension. So I'm bullish. And if this structure is true, then the NASDAQ will set a new all-time high at some point. There you have it. The bull case for the stock market as well, even with all the fundamental things out there at the, crazy stuff out there, right? What has happened? The market's moved up 20% for the NASDAQ since then. So narratives can change. Inflation narrative seems to be changing. We'll see how the rest of the things play out in there. But I'll go ahead and start wrapping this thing up. Since it's Friday, we'll give another drama update. I posted something over there on Twitter. I was actually up really late last night because I did play live music with some other people. That was weird to do that. It felt real odd because, I'm not very good. So I was up to 11 o'clock last night, which is crazy for anybody who knows me, that I'm usually in bed by 8 p.m. But anyway, people are like, no, make it stop. You're drumming. And I can't play that on here because that has a Papa Roach song playing in the background. I don't want to get a copyright strike for playing music on there. But so then I decided to play a lovely song that me and my brother-in-law played together about a year ago. And then, like I mentioned last week, we actually ended up getting a fish tank. It was this whole drama on how we ended up getting a fish tank, but a lot of people commented on it, on things you needed to do differently. Hey, look, I got some live plants, like some people said. I do read the comments on these videos, but there you go. There's a fish tank update. So that's kind of what's been going on with me. Still working on the drums and still making improvements to the fish tank over there. So I hope you guys like those updates. Otherwise, I'm going to go ahead and start wrapping this thing up. Again, the sponsor of this video is Linqto, private investing made simple. where you can access the world's leading private companies before they go public or before they IPO. Anybody can sign up over here on Linqto to get access to research and informative newsletters, which provide data and insights into what's going on in the markets. And if you click over here on Invest, they've got their whole list of private equity companies you can invest in over here on Linqto for accredited investors, including popular ones such as Ripple and BitPay and Linqto. There's a link in the description of this video to Linqto where you can sign up today and get started on your journey of private investing. Otherwise, it's been a long week with a lot of videos that were really long, man. It's been a long time since I've put out videos that were like 35 minutes, 39 minutes. I took yesterday off because I was just like drumming and I knew I had to go play in front of all these people at night. And I was really nervous about it. I was like, I better practice. But now we're at the end of the week. Another long video, again, pushing over 30 minutes. I hope that you guys have enjoyed these videos this week. I tried really hard to be topic specific this week. I kind of gotten into like a bad habit of where I really like jumped all over the place all the time in my videos. So this week I was really trying to focus like each video to be like really focused, and then we'll build on top of that throughout the week, and then we'll try to tie a lot of it together at the end of the week. But I hope that you guys enjoyed the videos that I put out this week, that they tried to be more specific, and it seems like a lot of you did. So we'll keep working on that. But otherwise, it's the weekend. I am going to be taking the weekend off. I hope that you have a wonderful weekend, and of course, I want to thank you for watching my channel. So that's going to be it, guys. That's going to be it. I'm going to wrap it all up. I want to thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice, and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.